So is gold a safe investment? And if gold is a safe investment, does it mean that it is not very profitable? Hi, I'm Brian Chu, the resident gold commentator and editor in Port Phillip Publishing. You'll find my product, Rock Stock Insider and Hard Money Trader. Now today, I'm going to talk about gold as an investment and whether it's a safe investment. Many people think that gold is a boring investment because the price doesn't really move. Or at least that's what you tend to hear when you watch mainstream media news and financial commentators. They seem to focus much more on the price of gold dropping rather than the price of gold rising. Let's have a look at how gold performed against the Australian stocks based on the ASX All Ordinaries. As you can see, since 2000 to 2021, the price of gold actually rose in a similar fashion as the ASX All Ordinaries index. Up till the subprime crisis of 2008 to 2009, you could see that the Australian stocks were actually leading the charge. Gold did not fall behind too much. In fact, if you invested $100 in gold or in Australian stocks, with Australian stocks, it would have gone up to about $300 by 2007 and about $240 when it comes to gold. But when you see the subprime crisis occur, it took the price of ASX stocks down quite sharply. It fell around 45%. Whereas gold actually continued its move all the way up, even past 2008. There was a slight correction in gold, as you can see, in late 2008, and then it bottomed in November 2008, and then it rallied again up till the peak, at least a short-term peak in September 2011. That was also a similar time when when gold in US dollar terms hit the record high of $1,921 per ounce, only for it to drop quite sharply in 2013. As you can see, gold was still ahead of stocks even when it corrected itself between 2011, late 2014 when it hit the bottom. And from 2014 onwards, as you can see, gold and stocks both went up in a similar fashion. In the lockdowns last year, you could see stocks fell by about 30 to 35%. Gold continued to go up and hit record highs of 2,800 Australian dollars. Now, in the second half of the year, last year, gold moved backwards while stocks moved forwards. But right now, they're actually head to head. Let's look at what happened with gold and property in Australia. We'll use the Sydney property market as that's probably the hottest market in Australia. This graph is a bit surprising, isn't it? From 2000 till now, you can see the property price actually gone up. Gold actually is the better investment. And we're just talking about holding gold bullion and coins. $100 in gold would be worth just under $500 right now, whereas with property, $100 would amount to just under $350. That may actually not be too good a news for most of our Australian investors out there who borrowed a huge amount to invest in property, believing that that is the safest and the most profitable way to get rich. With gold, it seems like that was a safer and the more profitable investment choice. Now, investing in gold, you can watch it. You watch TV and the media commentators talk a lot more about US dollar gold, but we here in Australia, what matters more is the Aussie dollar. And you can see in green, the US dollar gold price went up from about $250 in 2000 to $1,885 at the time of recording now. Whereas in Australian dollar terms, gold was $500 in 2000, It rose up to 2,800 about August last year, and right now it's trading at $2,420. In both cases, gold has gone up at least 4 times the initial investment. And if you're talking about safe, well, there is not many investments can be safe during this very volatile era that we've gone through in the last 20 years. But at least with gold, you can see it's a pretty safe bet. It doesn't go up in a straight line, but there is clearly an increasing trend. Let's look at what happened with gold since the subprime crisis. So before the subprime crisis hit, in January 2007, gold was about $750, and it actually surpassed $1,000 for the first time in the midst of the subprime crisis unfolding. Gold continued to go up above $1,500 by about 2009 and hit $1,800 in 2011 at the same time when the US dollar gold price was $1,921. Now, the brutal sell-off of gold in 2013 to 2014 was quite painful to watch, especially when on TV you hear about the US dollar gold price falling from $1,900 to about $1,045, which is almost a 50% drop. But in Australian dollar terms, because our Australian dollar weakened against the US dollar, our drop was not as brutal in terms of the percentage decline. So we fell from 1,800 to about 1,350, which is about a 25% decline. Afterwards, in 2014 and onwards, as the price of gold rallied, we actually enjoyed that because the Australian dollar fell even further. So we saw the price of gold rise from 1,350 to about 1,800 near the end of 2016. Then it stayed range bound between 2016 to early 2019 in the $1,500 to the $1,800 range. In May 2019, when we saw US dollar gold rise above 1,400 and we actually hit the $2,000 mark. We haven't actually come down from that since it actually rose. Even during the lockdowns last year and also the bear market that we had since August last year till March this year, we have remained above 2,200. So if you look at 2015 till now, in the world of QE infinity, where central banks are creating currency and basically just lending it out at infinitum, gold looks to be quite a safe investment, even though it goes up and down, but the general direction is up and it has been increasing at an increasing rate, as you can see. We may have had the bumps, and we also had the brutal decline last year in March and also last year in August till this year in March. But you can see the increasing trend, and it looks like going into summer this year, we could be up for yet another rally in the gold price. So if you believe that gold is a safe investment, then hopefully what I've shown you today further strengthens your case. If you're in doubt about gold investments being a safe choice, hopefully the graphs today and also when compared against property and stocks, you now have a different perspective. I'm Brian Chu.